Hello everybody, this is Toni Turner and welcome to the market now as of about noon Eastern on Friday, March the 2nd. So far today, the Dow Industrials has fallen more than 1%. This is the fourth straight day of falling on mounting fears of a global trade war following President Donald Trump's promise to impose import tariffs on steel and aluminum. The move also comes at a time when markets are already on edge over rising U.S. interest rates and bond yields. On that note, let's move into three charts that could give us some insight into the week to come. First of all, as we normally do, we're going to look at our daily chart of the S&P 500 SPDR, symbol SPY. On this chart, the red line is the 20-day moving average, the green line is the 50-day moving average, and the black line is the 200-day moving average, and these are all simple moving averages. So let's look at this chart. We had an all-time closing high on the SPY of $286.58, which is about $28.65 on the S&P 500 itself. This came on January 26th. Then it fell like a stone, as you probably know. By February 9th, it fell to a relative low atop its 200-day moving average at 252.92, and then rallied back up again, a lot of short covering here, in a near parabolic move that took it back up to a swing high at 278.90 up here, and then of course this week fell back down to where I captured it today so far. The SPY is trading at $265.83 or about $26.58 on the S&P 500 itself. So we have had quite a ride actually in the last month. What we see here is at 265.83, the SPY has pretty important support here, price support at 264, which is 26.40 on the S&P 500 itself. It would be ideal if the SPY could hold here and then rally in the coming week, as that would make it a higher low. Whenever price goes to retrace a low where it's been before, if it can make a higher low, that means that new buyers are coming in that have faith that the market will move up from their buy point and move higher. So if there's enough buying pressure coming in here, it could overwhelm the supply that's getting thrown at it by the nervous investors out there, and it could push it higher. If, however, in the coming week investors put their hands, take them, leave them in their pockets and don't take them out with their wallets, then SPY could fall below 264 and head back down toward its 200-day moving average, again now coming in at $255.88. So that would be a support area here, potential support area, should the SPY need to fall. Again, what we'd like for it to do is make a higher low here, somewhere along the line, saying that buyers are coming in, and then ideally move back up over its 50-day moving average, which is now coming in at $273. That particular move would be very positive for the market, of course the broad market, right, in the coming weeks. So we'll have to see what happens here. I doubt that it's going to move sideways in the coming week. I suspect that it's going to, with the volatility we have right now, I suspect it will rally higher or it will roll to the downside. I can't picture here a little consolidation, although of course it could always happen. So let's keep an eye on the SPY in the coming week. Let's see what it does. It will mean a lot to our portfolios depending on whether it moves higher or lower. Our next chart today is the PowerShares QQQ, symbol QQQ. As you all know, this is the NASDAQ 100 exchange traded fund. And we see today that the QQQ is trading at $163.23, right at this rising trend line that I've drawn here, which is mimicking the 50-day moving average. Also, we have the 20-day moving average coming down, smacking the price on the head today, and we have the 50-day moving average right here at price as well. So at this 163 level, we do have a lot going on. Now, the QQQ made a new all-time closing high on January 26th back here at $170.93. Then when it rallied off these lows down here in February, it rallied back up almost to that high. So what do we have here? We have, and it's not happening yet, and I don't want anyone to think about it or worry about it, but what we have here is, if things don't go right, we have the potential for a double top, but that is only if price comes all the way back down to about $150 at its prior low and then falls through it. So with that in mind, we want to keep an eye on the QQQ next week. It either needs to bounce off this trend line and the 50 and 20-day moving average and head higher if it's going to maintain its uptrend, or it moves below those lines but makes a higher low somewhere along the line here and starts back up, of course, hopefully back up to move above its 50-day moving average. As I said, the double top will only be in place, and that is a very negative top reversal pattern, but it will only be in place if the Qs come back down and break through $150 and change, and let's hope that doesn't happen. Okay, so keep an eye on the Qs next week, and of course all the big players in the Qs will be responsible for where it goes, meaning the FANG stocks, so keep an eye on them as well. Our last chart today is the iShares Philadelphia Semiconductor ETF, symbol SOXX. We haven't looked at this in quite a while. This exchange-traded fund gives us exposure to U.S. companies that compose the semiconductor industry group. Top components are NVIDIA, Texas Instruments, Intel, and Qualcomm. Now, it made an all-time closing high on January 23rd at $188.69, then fell with the market pretty dramatically down to $164, then turned on a dime, a little more short covering here, of course, and buyers coming in, and rallied back to its highs this prior Tuesday. Now, as you can see, when it came back up to its highs, the SOXX made a gravestone doji here, this candle on top that looks like this. That's what the SOXX made, called the gravestone doji, because when it appears at the top of moves, it usually pressures price lower. It was confirmed the next day by a bearish engulfing pattern, and sure enough, price did fall. But the SOXX only came back down here to the 50 and the 20-day moving averages, and they're both underneath price today. The 50-day is coming in at $178.86, and when I captured this chart today, the SOXX was trading at $182.87. If in the coming week the SOXX can remain above its 50-day moving average, move up to, say, 183, maybe 183.50, 184, I will be looking to add very small position, because I'm not adding any big positions right now to my portfolio, but perhaps a small position of the SOXX as long as it stays above the 50-day moving average, again coming in here at 178.86. Should for any reason the SPY move, or the SOXX, excuse me, roll over and fall down below its 50-day moving average, I will be out of that trade. That will be my protective stop point. I'm not giving the market any room here because of the volatility. If I'm in a trade that doesn't work, I'm getting out. And of course, we can always put in hard stops with our brokers, which takes some of the worry out of getting close. So, on that note, now on to the next week's coming economic reports, but first, please join us this coming Monday, March 5th, for our next session of Toni's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, And I'll give you stocks and ETFs with their entries, protective stop, and profit target that may be right for high potential trades. And we've had some really good ones lately. This is a low priced, high value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, no problem. The recording of our session is available to all of our members just a few minutes after the session ends. For more information and to join, go to tonysmarketclub.com. And now for the coming week's economic reports. On Monday, we have ISM services. On Wednesday, we have the ADP employment change and our usual crude inventories. On Thursday, we have our usual jobless claims and natural gas inventories. And on Friday, we will get the jobs report along with the unemployment rate, which may be important to the Fed meeting, which is coming up later in March. Again, join us for Tony's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is the Market Now.